What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tonight, we're going to go over Thursday, February 26th charts. All right. I'm going to show you some of the best opportunities that were on my watch list today. I'm also going to show you the trade that I took today on the DJ30. All right. But before we jump straight into the charts, first things first, right? No matter what day it is or what session I'm trading, I am always going to be looking for the same type of structure on my charts, okay? We know there's only two types of setups, right? We have pump and dump or dump and pump. So every single day, whatever the session is, I'm always going to be looking for a pump, coil, and dump, or a dump, coil, and pump, all right? Or we may see something like this, a tightly coiled market, okay, that explodes in one direction before trading in the opposite direction, right? This is what we call our A top or V bottom reversal patterns, okay? And this is what I traded today on the DJ30. We had that A top reversal pattern, okay? So remember, no matter what, I'm looking for the same thing every day. All of my trades look very similar, okay? They're not exactly the same, they're not identical, but they look very, very similar to one another, all right? And that's the goal in our trading. We want to be consistent. You should be trading the same setup over and over and over again. Like Stacy says, like Steven says, round kick, right? That's it's a Bruce Lee quote. Bruce Lee said, allegedly, right, that he does not fear the man who has practiced 10,000 kicks one time, okay? He fears the man who has practiced one kick 10,000 times, okay? He really has mastered that kick. That's what Stacy means when he's saying round kick, round kick. You should be trading the exact same setup every time you come to your charts, or you should be sitting on your hands doing nothing while you wait for that setup to occur, okay? Now let's get into these charts. So I'm not saying that these are like the greatest trades. You should have taken these trades or whatever, right? I'm just showing you some well-engineered charts, okay? And how you can sort of identify these things going forward in the future, all right? Now, here's the oil chart. We're looking at a 5-minute chart here. You can see that we've broken out of the previous day's low, okay? We've been dumping down into the New York session timing window. You can see we have 3 pushes into the low, okay? An inverse head and shoulders pattern, if you would like to call it that, right? Okay? Now, if we look close, right, right here, look at the time. Here's 9 o'clock. So around 9:30, 10 o'clock, right here, we have a very nice sort of pattern going on for your entry long into this market. But if you remember the master pattern, okay, we have a peak formation high, peak formation low, higher highs on the inside. If we drew our little imaginary trend line right here, we would see this sort of break in structure to the upside, okay? Or a change in character to the upside. I don't know those terms, but you know, I hear people saying it. So something like that, right? Where we go from making lower lows to potentially now making higher highs. Now, when we shift from backside or whatever to front side, we know that we are looking for dump and pump scenarios in our session, which is exactly what we get here, right? We put in that high, we dump down, coil sideways into that EMA, putting in a micro W formation before going parabolic, where straight back to this anchor point, straight back to this target, okay? And then past it, okay? But very nice chart here. You can see this orange line would have be my perspective or my prospective entry. Okay. The first convincing 5 minute candle closure above that EMA. Okay. Or in the direction of your trade. You can see right there, or maybe the second green candle, that would be your entry. Your stop loss would go below these lows or at the low of the day. Okay. Targeting that anchor point or targeting the high of the current day, right? We're trading from level to level, from low of day level to high of day level. Very nice chart here on oil. Here we're looking at EU, or the Euro USD currency pair. You can see we have Monday's high of the week level right here. Now, Tuesday breaks Monday's low. Then the next Wednesday breaks Tuesday's high, which confirms Tuesday as our potential false break at the low of the week, day 1, day 2, and Thursday becomes our day 3. Early on Thursday in the Tokyo session, we are retesting Monday's high of the week level. Okay, we're working into that high, and then we go lower, we pump up into the New York session, and then continue to go lower once again. Okay, we have this gap time low put in place. We pump up to the previous day's closing price, which is this yellow dotted line on my chart. We coil sideways, put in an M pattern right there before going lower. Now, if you need a refresher on the master pattern, here it is. Okay, here we're looking at a pump and dump type of scenario. Okay, and we're looking for 3 simple stages. Okay, the first stage, we have a peak formation low put in place. Okay, the second step or second stage is a peak formation high. And then the third stage is a lower lows on the inside. Okay, so on the front side of this move, we've been putting in higher highs and higher lows. These higher lows should hold as long as we are going to continue going higher. Okay. But you can see here, we actually break this last higher low, right? We put in a lower low. Okay. Once we have this lower low on the inside, now we can suspect we are on the backside of this move. And if we are on the backside of this move, putting in lower lows now, potentially we are looking for a pump and dump type of scenario in the session that we're trading. Okay. So peak formation low, peak formation high, lower lows on the inside, pump and dump. Right. And that's exactly what happened on EU. We have Wednesday's low as our peak formation low. Thursday's Tokyo session gives us our peak formation high. And then we have lower lows on the inside put in place during that London, New York gap time. From that low, we, like I said, pump up to the previous day's closing price, coil sideways, put in an M pattern, and then we dump down, okay? Straight back into Wednesday's lows, okay? Very nice chart for the currency pairs. Now, here we're looking at the NASDAQ. Now, I know that this looks, and it was a very nice day, very good trading day for anyone who happened to get in on this market, right? We had a Wednesday, I believe, close and breakout, coiling sideways, okay, for the dump. We're working back into the high of yesterday. We're not going all the way back up there, but we are pumping up into New York, okay? Working that high. If we were working the low, this market would have dumped down and been working into the low from the previous day before going parabolic to the upside, okay? But instead, we are up high, working into the high of the previous day before dumping, all right? Now, the reason I did not trade this market, all right, even though it looks very nice, okay, all of this price action right here where we get the start of that dump, like you can see here, right? This was like the ideal entry on a 1 minute chart right there, okay? But this is all before 9:30. 9:30 is right here with this gap down candle, all right? Big bearish candle, then you can hardly see it, but we have a big bullish candle, big bearish candle. So not only have we not broken a daily level, okay, but this move started just a tad early. And so I would be a little suspicious. I would be a little hesitant. This market would make me think a little too much, all right? Which is the main reason why I bypassed on this market. I thought that the DJ chart was a little better, okay? We had a very nice, well-engineered chart on the DJ30, but still, this would have been an awesome trade, okay? And I'm sure it was for a lot of people. It's just not for me, okay? Now, here we're looking at the DJ30. You can see we have the previous week's high marked off and the current high or the current week's high marked off, which was on Monday. Okay. And we have the current week's low marked off, which was also on Monday. From that low, this market has pumped up. Okay. Back into the high of the week level. And today on Thursday, we actually break out of the current week's high. Okay, we break out of Monday's high. We're trading back into the high of the previous week. Okay, and for that reason, I was watching the DJ30. We actually broke daily levels and are trading back into weekly levels. All right, so I had my eye on this market, and you can see here, this is the trade that I took. I did not average in or anything like that. I took one large position in this market. And you can see I entered on the first convincing 5-minute candle closure below that EMA, right? Stop loss was right above these candles, right? We had that big, I didn't want to put it all the way up here at the high of the day, okay? So I kept it tight right there at the previous day's high of day level, right? And as you can see, it did not come back against us. Now, I shut down or took off 75% of this trade once we hit this closing price. Okay, you can see where this pump started. So once we hit that level, 75% of that is off the table. All right, I let the remainder run until we got down here and started putting in these green candles. All right, as soon as we engulfed these, you know, 2 5-minute candles right here, bam, I'm out of that market. Okay, just shut it down. I tell you guys this all the time. I'm shutting it down when I feel like I should shut it down. I use my intuition for this, right? And I don't give a damn if this thing were to continue downward for another 1,000 pips. Okay, I don't care. Right here, I shut this down right around 150 pips. The rest of it, I shut it down and we were at about 230 pips of profit here on the DJ30. So I had absolutely no problem with shutting this down and taking the money, okay? And then shutting the screens off. Remember this, no one ever went broke taking a profit, okay? Don't be afraid to take the money off the table, okay? Now, here's a screenshot of my actual entry. You can see what time I got in, or what time, at least I took the screenshot. I'm pretty sure it was right when I entered the trade. Okay, so you can see exactly where I got in, where I had my stop loss, right? And that first initial target there, okay? Later on, I did widen this target, okay? As you can see here, I widened that target all the way down here just to give it space, just in case it just totally collapsed through those levels and I would still have opportunity to be in that market. Okay, so I just moved it down. But this is where I took off the bulk of my order, 75% of the trade, and I let the rest run just like I showed you. And you can see how much time has went by, okay? Just about 30 minutes here to lock this in. All right. Very nice trade. I sized into this trade, locked in a very nice profit, and went on about my day. Okay. I had stuff going on today. You know, I got my daughter up early with me. So the quicker I can get in and get out of these markets, the better. Okay. I've told you guys this before in old videos, but as much as I love the art and science of trading itself, I actually hate trading. I don't want to be in the market. I don't want to have my money at risk in the market. I'm trying to limit my exposure. All right. So if I can take one fat trade, okay, and lock in a healthy profit, I'm out of there, bro. I've been trying to explain this to people because there's a lot of traders who, you know, they believe that the only way you can trade is by risking 1% or less per trade. Okay. And they also believe that making 1% a day is impossible. Okay. Consistently over time, if making 1% every day, making 2% every day, that sounds very unreasonable to them. And when I try to explain myself to people, they're just unable to get it. Okay. They're locked in on their thought process. So I would agree that if you are trying to make an easy an easy 1% daily compounded, okay? On a daily basis, you're compounding that 1%. That might be impossible, okay? Or 2%, that might be impossible. Now, it's a totally different story if I have a legitimate setup and I know exactly what I'm looking for, all right? And I am willing to wait until my setup occurs, even if that means I have to wait an entire week. Okay. But when I trade, the day that I decide to trade, right, 2% is nothing. All right. 2% is nothing. I am regularly blowing that out the water by a large margin. Okay. So, and let me drop this on you, okay? Now, if I take this trade on the US 30 and I size in, let's say that I risk 10% of my account on this trade because it's a setup, a specific setup. I know exactly what I'm looking for, when I'm looking for it, where I'm looking for it, why I'm looking for it, and how I'm going to trade it. Okay, if I know all of that and my setup occurs and I size into this trade and I hit, like I did today, just about a 1 to 3 on this trade. Okay. When I took the bulk of the position off, it was like almost a 1 to 4 with the runner included. All right. So let's just use the 1 to 3. If I risk 10%, that means I made 30% on this single trade. Now, if I make 30% on Thursday at the end of the month, right? It's the 26th. Why would I come back tomorrow and be sizing into trades? All right. Why would I come back tomorrow at all? Why don't I just shut it down for the whole month, bro? If I make a 20%, 30% gain on a single trade. All right. So while these people are trying to trade every single day and lock in a measly 1% and failing miserably, right? I'm over here taking one trade and locking in 30% on my account balance. Right? Do you understand what I'm saying to you? Do you understand the difference here? There are levels to this shit. So I'm tired of people saying, that's impossible to lock in a 2% gain on a consistent basis. Like, bro, don't try to limit me in my trading. If you don't think that's possible, don't shoot for that. You know what I'm saying? Make your little 0.03% per day and be happy, okay? You try to do that every single day. Me, I'm going to sit back. I'm going to sit on my hands. I'm going to wait and wait and wait and wait until my setup is here on the charts. When my setup comes, I'm going to smash it, bro. All right? All right? I know I tell you guys, base hits win games, okay? Start off slow, but once you have some experience under your belt and you feel comfortable and you see a setup that's very clean and obvious to your eyes, hit that shit, bro. Load the boat. Get your money quick and get the hell out of Dodge. You feel me? All right. I appreciate y'all, man. I appreciate y'all listening to me rant. And until next time, I hope you continue to free your